Hi, thanks for joining me today. This is Anthony Parent of IRSMedic, and we have our 2020 US Expat Tax Survival Guide. We have some great guests with us today. You know, if you're a US expat, I'm going to say here's some emotions you could be having if you're thinking about the IRS. Like you say, indifference, maybe you don't care about them. Hostility, anger, humiliation, degradation, impossibility, inhumanity. Laura Snyder, our first guest, she is an American living in France, a member of the IRS Taxpayer Advocacy panel, and she represents international taxpayers. Laura, what would some words you would describe you think expats would be going through?
With respect to the U.S. tax?
Yes. How do you think they're feeling today, perhaps?
It's interesting. I did a survey that was published last year where people talked a lot about how they felt about things. And, you know, they used words like angry, stressful, frustrated, I want to cry. I can't believe that my country does this to me. Who does this to their people? They talk about having marital problems. Do you want me to go on, or is that enough?
Well, we have other people to get to, so let's stop there. We don't want to. Well, actually, I don't know if we would actually run out. We might run out of video space though. So let's stop there. Our next guest, Keith Redmond, advocate for the American overseas, founder of the Facebook group American Expatriates 2.0, and truly a fantastic instigator of great change. He's really behind the scenes doing a lot. Keith, thanks so much for joining us. What would be some emotions you would add into that stew of unpleasantness?
I would say exasperation, confusion, lack of understanding of what needs to be done, and I'd say last but certainly not least, what's the value, or is it worth it to even get involved?
And that's a good question. The worth it part is a great question, and we're going to be answering that. We're going to be getting to some questions about who really needs to comply, and then the people, well, I can't say it. Maybe somebody else could say it. Speaking of which, our final guest, John Richardson, attorney, advocate, and just someone who I greatly admire, someone who has a way with words, and I think somebody who's really, really gets what liberty is all about. He is a U.S. attorney. He's based in Toronto. And also you can find him at citizenshipsolutions.com or .ca. John Richardson, thanks so much for joining us. What would be the emotions you would add in here?
Well, you know, I certainly would adopt everything that Laura and Keith have said, but I would add one word that they did, and that is betrayal.
Yeah.
Yes.
And you know what? And I'm going to add another word to that, absolute betrayal. And I'll add to that absolute unqualified 100% betrayal by the
John,
United
I
States.
was thinking to myself that was a word I should have used, and it came to me after Anthony moved on to Keith.
I know that. That's why I was just reading your mind, Laura.
Wow, that is it. Wow, that is powerful, John. Thank you so much. I was thinking about this, you know, why we ended up, you know, I always kind of think about the big concept things sometimes when I'm doing things. Maybe I'm riding my bike, and I started thinking about this. Where people start thinking about, okay, what's the relief we're going to seek? Well, we're going to get an exception to this or qualify to this. And I think this is where everything goes off the rails. Because our premise is entirely wrong. If you know the U.S. income tax code, you know this. You know that every dollar you make, the second you make it, the IRS has a claim to it. The IRS has a claim to every dollar you make, the second you make it, and it's something called a secret lien. It's there. It actually exists. And so that's the thing you have to think of. Everything you make is subject to the IRS, and this is what you're left over with. That's actually how the code works. Because when you look at that, you say, wait a second. Because we have this code this is how it works. Everything's subjected to your taxation, but, you know, thanks to exemptions, exception, carve-outs, clawbacks, limitations, phase-outs, relief, refundable credits, non-refundable credits, safe harbors, it goes on. And the IRS's number one word, qualified, you're left with this. And so we end up with a complete disaster, right? When you do this, you're going to end up with complete disaster. And then the immediate solution somebody has is, you know what we should do? Another exemption. And you want to just pull your head out. You got to be kidding me. When you add an exemption in there, you are making it more complicated. Everything you're doing to fixing your thing that's broken from the beginning only makes it worse and worse and worse. And so that's where I say the only fix, I think, to this is just to stop. Stop doing what we're doing, taxing citizens around the world. Now, let's get into some scenarios of who needs to comply. So, Keith, do you want to start us off with somebody? Do you have anyone in mind or an idea in mind of somebody that you think is questioning whether they should enter the U.S. tax system? Here it is. We have someone who hasn't entered this U.S. tax system, and they're wondering, well, here's the law. It's scary. Should I comply?
Well, I'll give a scenario of just something very simple, whether it be, I'll just throw out the first thing that comes to mind is an accidental American, if I may, someone who has left the U.S. in diapers and has spent the rest of his life in his parents' country of residence, let's say France, and fast forward 30 years and they get a FATCA letter stating that they need to supply a social security number or a certificate of loss of nationality to their bank. And they realize that they should have been complying technically all these years with the IRS. The big question is, should they enter the U.S. tax system or not? They have nothing in the United States, no family, no assets, nothing. The only thing they have linked with the United States is a U.S. place of birth. And in many times, they don't even have a U.S. passport. That's a very typical scenario for that bucket of individuals. What do? That's one scenario.
Okay. I know how I'd answer that one.
And I know how I would.
As a tax attorney, I would advise complete compliance. But I'm sure a friend of mine would tell them something else.
That is true.
What would Laura? What would you say in that situation?
Would I advise a person in that situation to comply or not?
Yep. Yeah. Laura is also an attorney. Laura, would you advise your client to comply with the U.S. law?
I think that I would explain to the client what their options were and what the most likely consequences were of each option, and let them make their own decision.
And what the level of those consequences are, what the risk is in reality.
Of course. Yes, of course, that's part of explaining what
Right.
consequences could occur and what's the risk of each possible consequence.
And one important thing that people tend to forget, what protections does that individual have in that person's resident country?
Sure.
Yeah.
Of course.
John, what would you say to that? What would you say? Would you follow? Because I would pretty much follow Laura. It's pretty much the same thing. Hey, look, this is what happens. Here's the consequences. It's, I'm going to tell you to comply. I have to, but here's what happens if you don't. Is there anything would you give different advice or add anything on?
I think, first of all, we need to be clear of the context here that we're talking about some individual outside the United States who, while outside the United States, learns about this problem of U.S. citizenship-based taxation and is seeking advice to an advisor who is outside the United States and who is not, say, a U.S. licensed lawyer. I think that people need to understand that the chances of finding a professionally licensed advisor who would specifically say don't comply, I think are very, very slim. And I'm not sure that I would necessarily trust the judgment of somebody who would say that so quickly. But I think that I would adopt more or less what Laura would say, that first of all, one needs to understand what compliance actually means. How complicated is it? How much will it cost? That sort of thing. So, that needs to be investigated. And then on the basis of that, I think I'd suggest perhaps another discussion. I certainly would not tell somebody to go out and comply, in those circumstances without any further analysis. There is one situation where I would be inclined to, I think, open the idea of compliance, and that is for those who want to renounce U.S. citizenship. I think that for many of them, there are benefits to compliance because of the whole, covered expatriate issue. And
Well,
stuff like
you know what?
that.
Why don't Why don't we get into hypothetical? Keith, do you think it would be a good time to jump into hypothetical about that? Someone who's considering expatriating, about when it would make sense to enter the system just to leave it. What would someone like that look like?
Boy, good question. I would think someone like that, from my sphere of thinking, certainly someone who would have assets in the United States.
There you go. Yeah.
Then there would be a consideration that would need to be viewed as far as compliance
and
to
the
system.
other,
or if it's someone based on their own personal character and level of stress, if they have a very simple financial profile where the cost of compliance and the cost of renunciation is the total cost versus handing over a significant amount of money to the IRS. Do you see what I mean?
Yeah.
If it's something very simple, then there might be a propensity for them to comply.
Well, actually, I would even say this from my own firm's experience. We represent a lot of people. When you look at their risk, you're like, yeah, you're not the highest risk, but they insist. Like, I know this is going to be expensive. I know this is going to be time consuming. I know the chances are I'd get away with it, but I just have to do it. And that's actually a significant amount of people who raise their hand and say, look, I just want to get this over with so I don't have to worry about it. That comes up a lot. What about somebody? Here's a hypothetical.
These are
the two things that we really look for when it comes to compliance. Because let's leave aside, because you can have someone who complies like, I don't care, I know I shouldn't have to, I know I'm wasting your time, and they're just their personal decision, and that's 100% valid. But people about the other kinds of people where it's really something where compliance is something you really better do is if you have assets in the U.S. because those could be attached by the IRS. If you have income or a potential income stream coming from the IRS is another thing, because you could have payments to you withheld as well. So
I'm sorry, Anthony, you said coming from the IRS.
No, I'm sorry, coming from the U.S. Sorry, yeah,
right.
Coming from the U.S. Those could be withheld as well. So those are the things that really require you to do it right. And I can mention a friend of mine, a good friend of mine, and if you watch this channel, you probably know who he is. He did finally decide to he came clean only to expatriate. And the reason why is that no assets in the U.S. However, his company in Europe does a lot of business in the U.S. And
right.
Yes, it's the company in which he's a shareholder. And would the payments to the company ever be known and withheld? Maybe, maybe not. But it's this whole question mark. And as somebody who's an entrepreneur trying to grow in a business, you can't have this in the back of your head thinking, oh, wait a second, I got to worry about the IRS. So he said, you know what? No matter what the cost is I got to get this behind me. Then when we got him into compliance, and he goes, okay, and then we're saying, okay, here's your yearly compliance obligation. He said, I think this is a great time to expatriate here. And so that's what he did. So after full compliance, and that's really something like that. If you are a global entrepreneur, that's somebody who I would advise being in compliance. Now, if you're, and I think it's a different situation. Well, what if somebody finds true love in Thailand, right? How about Thailand? You're in Thailand, and you basically have become part of your wife's family. You're basically in Thailand, and you feel yourself as Thailand, and you just sort of work a farm and have a very simple life. You haven't been in compliance. What's the risk of not being in compliance?
It's minimal.
Yeah, right.
It is a minimal risk, and each case has to be weighted on its own merits. So somebody like that, the risk is minimal, that it might not even be worth the cost of coming into compliance as compared to the initial person about whom you were speaking.
Yeah, and
because there's no attachment to the United States.
So let's figure this, because there are so many penalties that happen with your foreign return, so many traps here and there, and so this is something where people say, well, there's so many traps, I'm just going to avoid it. And that's really what happens, and that's sort of how backwards the IRS is they make this so scary. Why would anybody do this? The IRS is the IRS is looking for far too much out of things that can't get anything there. When you look at the penalty exposure for somebody who has very little income, very little assets, they live overseas, sure, but what kind of penalties could the IRS actually get on them? And here's the penalty triggers that we have that typically expats have to worry about. Your Form 8938. There's a $10,000 penalty on that, but that's only if your assets are over, if you're living overseas, over $200,000. If you're single, I believe, or is it 100? Either way, it has to be substantial. You have an FBAR filing obligation, and that is if your bank accounts in the entirety go over $10,000, and that may happen. As somebody without a lot of money, you could have a retirement account that be classified, and yes, you could be subject to an FBAR penalty. However, if your accounts are kind of below a certain threshold, even if you're assessed a willful penalty, it's maybe $500, $1,000. It's really not that much. And the only way for you to be audited is if the IRS examined you. But if you didn't file anything because you didn't have any income, how would you be examined?
Right.
And then the other penalty triggers we look for are for, if you have a limited liability company on a 5471, on a foreign pension, a 3520A. Those are the other things we're looking at. But again, you're not in the system. And so there's somebody, if you are sort of living that idyllic lifestyle, maybe you're going to the beach, surfing a little bit every day, then you're going back to fish a little bit, just sort of having a nice life and enjoying things. You really got to wonder, you are 100% non-compliance, but what can the IRS actually do?
Exactly.
I think
Laura.
a situation. I think there's a situation that's particular. I'm not disagreeing with you at all. Definitely, there's a situation that I think is special to the scenario that you just painted with someone, getting married to someone in Thailand and living in Thailand, because now the filing threshold for married filing separately has gone down to $5. And it's a disproportional number of U.S. taxpayers living overseas file under that status as opposed to domestic taxpayers. I think it's something like 17% of overseas taxpayers as opposed to 2 or 3% of domestic taxpayers use that filing threshold. So if you have $6 of income, you're meant to file an overseas tax return. An overseas tax return, it is the expense and the blood, sweat, and tears that goes into filing and to preparing an overseas tax return is far greater than $6. So what you're looking at is going into debt to file a U.S. tax return.
Yeah, and that's the truth. And with that, I think I want to get onto the suggestions that we have. There's people that need to really better comply. The risks are too much. And there's a whole bunch of people. It's like, well, what's the IRS really going to do? And it's that part right there. What's the IRS really going to do? We have about 7.2 million, 8 million US expats overseas. Maybe there's 1 million returns filed from expats. Maybe somewhere around there. So we have massive.
Not even that many.
Yeah, I think it's like 800,000. I think it's something like that.
Yeah, that sounds right. 800.
When you look at the forms 2555 or 1116, which pretty much every expat return is going to have one or the other. That's basically how there's your tell. So you have a 10% compliance rate. You're the IRS with a 10% compliance rate, and you're out here saying, you know what we need to do? We really need to increase our compliance rate. And I'm thinking, you know what? You're at 10%. That's never going to happen. You can stop it right now. You are trying to impose a law beyond your jurisdictional borders. It's impossible. You're giving orders you can't enforce. Therefore, you're wasting your resources. Why don't you stop all this nonsense and concentrate back at home, where, by the way, everybody's aware that the audit rate has gone down. Yes, every self-employed individual is now aware audits don't happen anymore. Oh, yes, they are quite aware. So there is a rampant non-compliance happening domestically because the IRS is wasting its focus overseas, a place they can't get. So my first suggestion would be to remove this idea of citizenship-based taxation. Now, that's really something that's probably not able to happen now. So with that, any other suggestions we could think of in the time, the actionable things that we could have the IRS do, some rules, some things we could think about. Keith, I want to start with you.
Good question. What can the IRS do? Is your question, what can the IRS do to make it easier for
Yes.
individuals overseas to
Yes.
file?
Yes.
Well, I mean,
Or
there's a
make it
whole-
easier just overall. We're doing a video on how much of a nightmare this is. What can the IRS do to make this less of a nightmare?
Well, certainly to have a better method in which to communicate with the IRS. Number one, people who are living overseas, they need to have some semblance of a toll-free number to contact the IRS. However, contacting the IRS in and itself is not good enough. Having a toll-free number, great, but you need to have people at the IRS who are going to understand the nuances in every single country around the world and their tax systems in order to be able to navigate what that American overseas and possibly accidental American needs to do in filing their U.S. taxes.
Is that too much to ask? Keith, I never thought of that, but yeah, you're right. In every country, there should absolutely be some IRS specialist to say, oh, okay, you have this type of pension. Hey, look, this is how we classify for these are how we do that. But it's not. People are completely on their own. They have to find their own professional that hopefully knows what they're talking about. I think that's a fantastic suggestion. Real people to actually help people give answers. And what would be nice if the IRS actually stood by the advice they gave and say, well, you should have done your own, because they do that too. Here's our suggestion, but you really better understand this your own. Laura, what would be your suggestions?
Well, I think there's a lot that, and you debate the merits, I think, of anyone, because any suggestion that's not simply stop taxing people who live overseas is not a good enough suggestion in the end. It's just to make things a little easier. The analogy that I always have in my head is having to pay these taxes is like if somebody tied a cement brick to your arm. Well, you can make it possible to make toll-free, phone calls to the IRS. You can make sure that those IRS people could speak to you in your language instead of English. You can do all those things, but that's like coloring that cement brick, or maybe rounding off the corner so it's more aerodynamic. You really need to get rid of the brick.
or it's like this: the IRS is giving you a free hospital ride, but it's like, well, why do you need to go to the hospital? Oh, because of the IRS.
Yeah. Like, oh. Okay, there you go. Oh, yes, that's right. Yeah. Okay. So, so I would make any suggestions that I would make. I would make with that caveat, and they are obviously not perfect suggestions. Yeah. So, you could say when people who live overseas who normally would be required to file a tax return, but the return would show they owe no taxes, they should either be exempted from filing or simply file a certificate where they say, a one page that does not require, $1,000 of tax preparation, to say, I'm not going to file this 60-page tax return because I'm not going to owe you any money in the end.
And Laura, I think that's actually an pretty actionable solution. Actually, I think that could just be a form change. I'm trying to think if that actually would even require a regulation change. You're just changing the form to put the answer up front to say, oh yeah, you don't have to do this, as opposed to as it is now, people go through all these hoops to say, oh yeah, you don't have to, you know anything. So it's like, well, let's just put it at the front, and that's a better form, might actually solve a lot of people's headaches. Now I'm gonna go next because I want to finish. I want to finish with John, so I'm going to go next with my suggestion. The IRS has burned and destroyed its reputation. This international stuff has torched it. The way that I look at the IRS has completely changed in the 10 years, and maybe I was a little bit of a Pollyanna back in 2009. The IRS is your enemy. It is an adversarial process. The IRS punishes the people who want to be in compliance, meanwhile, letting many of the worst get off entirely free. And nowhere do we see this more in the our offshore voluntary disclosure process. The people who raise their hand first to say, oh, you know what, I made a mistake. I want to be in compliance with the law. I am sorry. I have done this. Let me go through. I'll do 8 years of tax returns, whatever you want. I want to be in compliance. Those are the people the IRS punished the most, the absolute most. The people that came clean first, and then the people came after them you punish more. The people who've come in later actually can be treated somewhat fairly. There's some problems with that for sure. But I would say this: the IRS is if the IRS has any intent to get a reputation back aside something from a complete out of control monster, this is what I would suggest: refund everybody their fee they paid for their OVDP. You got money you shouldn't have got through fear and intimidation. Yeah, okay, and some people maybe got away with it, but the vast majority of those people disclosed are the best people around because that's their nature. They want to be in 100% compliance of law, and they look at all their behavior through the harshest light, and they were treated the worst. And IRS, you know what you did. You got penalties out of people for their retirement count, and they thought they were doing the right thing, and they trusted you. And I'm going back to that word that I heard earlier today: betrayal. The tax code betrayed them. IRS, you betrayed them. I suggest you get your act in order and start fixing things. Now, John, what would you suggest?
Well, first of all, I certainly agree with all the suggestions. My opinion on this is that actually US Treasury can end the whole thing once and for all, and I'll break my comments into two parts. The first is that the real problems are all related to either the taxation or the form filing for these international information returns, 3520, 5471, et cetera. So the first thing that Treasury can do, and they absolutely have the authority to do this, would be to make it very, very clear that foreign retirement plans that are created under foreign laws are absolutely not trusts for any purposes.
Yeah, it's easy. Yeah.
That gets out of the 3520 thing. If they say, oh, it's too much work to go through it, wrong. It's already been done by Treasury negotiating the FATCA IGAs. All the Model 1 IGAs have specific accounts that are exempted, and those can simply be adopted. So that would be the first thing. And, I think probably 50% of the problems would go away right there. Second, Small Business Corporation 5471s, there's no doubt Treasury has already exercised its jurisdiction in relation to a treaty non-residents where they don't have to file a 5471, they just file an audited financial statement. Same thing can be done for Americans abroad. So, those are some regulatory changes that could be made that would go a long way in cleaning up all of these problems. But my view of this goes further. I believe that Treasury could end citizenship-based taxation by itself, on its own. Just listen carefully and I'll explain why. If you look at Section 1 of the Internal Revenue Code, it actually says every individual on the planet, doesn't even restrict it to human beings, your dog, your cat, your parrot, everything that's a carbon life form on the planet is subject to worldwide taxation, unless, of course, you're a non-resident alien. Even Treasury has recognized the absolute outrageousness of that piece of legislation and took it upon itself in the regulations to Section 1 to specifically say that individual means either a citizen or a resident of the United States. Yes, it's true. Now, what's interesting about that is they excluded nationals. That's why, by the way, nationals are not subject to worldwide taxation, but citizens are. I mean, they've already agreed by doing that they have the jurisdiction to redefine individuals. So I would invite Treasury, absolutely, this is my invitation to Treasury, to absolutely do the right thing. Let's do an end run around Congress. Who needs them anyway? And just simply redefine individual as excluding any individual who meets the requirements of Section 911, that is either a bona fide resident of the United States, outside of the United States, or spends enough time outside the United States, and that would solve the whole thing. And Anthony, who would be the single biggest winner of this change? Who do you think it might actually be?
3 letters.
IRS. You
That's
got
right.
it absolutely
That's
right.
right.
Because, as Keith was pointing out, I would not want to be the IRS. I actually feel sorry for them. If in fact they take their job, they really believe that their job is to try to impose this. And it's not even, by the way, a modern tax code. It's an antiquated 100-year-old tax code that has no correlation with day-to-day life. So my suggestion would be that that's what should be done. And I would also, because I know that this is one of your video series, so it will be heard on the retail level, I would also ask that all individuals involved in these groups begin to lobby Treasury directly. This lobbying Congress, although helpful, is, I think, misplaced. I don't think Congress even understands the issue. But believe me, Treasury does. Okay, Treasury certainly does. They have deliberately chosen to not go along with same country exemption for FATCA. They have deliberately kept FBAR reporting requirements in place for Americans abroad, that is, after having considered the issue. So that would be my suggestion for how all of this could be achieved. And then, of course, people don't have to renounce citizenship anymore. But one final comment on the compliance thing, and it's this. People need to understand, one of the problems when people come to you and say, well, I'm not in compliance, what they imagine is that U.S. tax compliance is sort of like, complying with the Canada Revenue Agency or the U.K. tax authorities or wherever they live. Nothing could be further from the truth, okay? It's a completely different type of thing. And my opinion is that those Americans abroad who make an effort to comply with these laws will have to renounce U.S. citizenship because they can't comply. It's that simple. Compliance is the first step towards renunciation. So maybe the question, part of the answer to the question when somebody comes and says, oh my God, I'm having this horrible moment, I didn't realize that I had to comply with these laws. I mean, maybe the first question you ask is, do you want to be an American citizen? Because if you want to remain an American citizen, compliance is surely difficult. It is surely difficult. Once you file that first return and you have to keep it up, sooner or later you'll be renouncing. The only thing you're betting on is time.
Yeah, well, I think there's an argument that maybe Treasury might want to take your advice, and I think that
they won't.
Well, let's see here. Here's the thing that I think we need to do, because you and I know that the IRS is the number one victim of citizen-based taxation. Maybe we can demonstrate that to the IRS by showing the cost, by showing what we know, that we know their examiners can't even examine this stuff because it's above their abilities to understand it. That might be the best course of action, and maybe our viewers can chime in their own sort of examples of how this possibly can't be worth it to the IRS, and even maybe there's some IRS employees out there who want to leave some comments there, anonymously, of course. Give us some, sort of how.
Or not, Anthony. The IRS. Look, I mean, the institution's a problem. I do not for a minute believe that. Every individual in the IRS, thinks that this is good. I don't see anybody could think this is good. I mean, they're just charged with trying to do their job. So, I mean, I think that the point here is that Treasury actually has the regulatory authority to bring it into the whole thing. So why not bring it into the whole thing, do themselves a favor, and of course, do a good thing for all these people impacted by it as well.
Yeah. Well, fantastic. All right. Well, thank you so much. I want to thank our guests today, Laura Snyder, Keith Redmond, and John Richardson. Be sure to subscribe. We'll be having more updates on this, and check out our new 5471 series when we talk about complicated forms. And if you are someone who is from Treasury or the IRS who's watching this, and you're trying to wonder, why are they saying this is so complicated? Please check out our guide on Form 5471. That's a form that's required of anyone who owns of many people, not everybody, but many people who own even a single member LLC plumbing business in Berlin. Okay, so it's a little bit too much. So please take a look at that. This is Anthony Parent of IRSMedic, and I thank you for joining us today.